Welcome to the Practical Wealth Show. So today, the big idea for today, revenue is not wealth. A business owner can have sales, staff, and status and still be broke because the money is leaking through taxes, poor records, debt, weak pricing, and no financial controls system, right? So we're talking about one of the biggest traps that I find in business, confusing revenue with wealth. A lot of entrepreneurs look successful from the outside, but I can tell you they're stressed out. Okay. So a lot of entrepreneurs, what do they call it in Texas? Big hat, no cattle. But behind the scenes, you're dealing with tax surprises, messy books, cash flow pressure, no clear system for keeping what they earn. My guest today, Rachid the founder and CEO of RMJ Consulting. Consulting.
That's right.
Yeah, consulting. He helps business owners move from reactive tax filing to proactive tax and financial strategy. So we're going to unpack where the money is really going and what owners can do to stop the leaks, especially the tax leaks. So Rachid, welcome to the Practical Wealth Show. Tell them what I didn't tell them.
Oh, thank you so much, Curtis, for bringing me on the show. I really appreciate it, and I commend you for the great value that you do on your show and bringing a lot of financial awareness to people. This is really good value that you're bringing to people, and thank you for doing that. And on my side, it's really my job is really simple. It's bringing tax strategy, tax planning to business owners and also to W-2 earners, because it's not only for business owners. I tell people that on the W-2 side that one of the expensive myth in personal finance is actually thinking that tax strategy is only for business owners. Even as a W-2 earner, there's possible strategies that you can put in place also to mitigate your tax bill.
Mm-hmm.
So my job is really simple. It's looking at the W-2 earners, looking at the business owners and saying, hey, instead of just going to your accountant or your advisor at the end of the year and just go ahead and file your tax return, now let's work backward.
Let's work backwards. I like that.
Let's start planning things before it happens. So whenever you're going to file your taxes, there's no surprise. You exactly know what's going on because you worked through the year to make sure that the result look like what you were expecting legally. There's
Right.
legal ways, there's legal frameworks that are out there. You just have to learn it, work with the right expert, and make sure that you apply those strategies so you can have some best results.
The emphasis on legally, like the tax code is really a map. And I was at a conference with Tom Wheelwright. He says it's a treasure map. You just do what the government wants you to do because it's a series of stimulus programs. And that's the trick. There's no, when people say loophole, I don't know if there's a real loophole. It's just the law. And, we have to learn to follow the law, right? And which the law says, let me end with this. I'm going to get to my first question, but I was told, tell me if you agree with this. So I put it out there because I want to make sure feel free to correct me if I say something crazy. All right. So the law wants you to do the tax code the government wants four things. They want jobs. Who creates jobs? Businesses. So they have to create an environment that allows people to start. And because if you grow your business, you need to hire people. So that's where jobs come from. They don't come from government, right? Which is a revelation at some politicians. All right. So depending on what, don't get me started. All right. Two, they want energy, right? They want energy. So whether it's oil and gas or solar, whatever, it's energy. They need energy, right? So they'll put incentives for people to invest in new energy, renewable energy, whatever, right? Three, they want food, right? So agriculture. And four, which is probably the biggest, housing, because America is really based on real estate, right? And so, if you're a real estate investor listed as your business or your product is safe, clean, affordable housing, right?
Yes.
And if you'll do that, the tax code will reward you. Is that a good kickoff for our conversation?
Yes, that's the perfect good kickoff because I believe, those four elements that you just said, jobs, food, energy, and housing. It's really about growing the economy. So if you and I tell clients that Tax avoidance is legal. Avoiding taxes is legal. You
Yep.
know, there's no problem in avoiding taxes. But the part that is illegal is tax evasion.
Evasion, right.
Yes, tax evasion is illegal, but tax avoidance is not. It's legal. You can go ahead and plan strategies, and those four elements that you just gave. If you don't want to pay taxes, but government gave a lot of incentive in energy. Hey, you invest in energy, you get a tax break. You invest in housing, you get tax break. Cost segregation, those things are, energy is like solar tax equity strategy. Or agriculture, there's tax breaks there. Or you invest in creating jobs, so then there's a lot of incentive there. Research and development and things of that nature, strategies. So then that will give you a tax break. So if as long as you're doing those things, you are in the green and you are actually contributing in growing the economy and also lowering your tax bill.
Yes, absolutely. So I want y'all to see, you got to go into it with the right mindset, right? Because your number one expense, your number one wealth transfers, the transfer, money's leaving your checking account going to the Treasury Department. Okay. And so if you pay a tax you didn't have to pay, then not only is that money gone, this is what they don't do, Rashid. Nobody teaches opportunity cost. Like, what is the value of that 25, 30,000 you paid at interest over the next, because once it's gone forever, but it doesn't stop working forever, just stop working for you. Right.
Yep.
And so that is like 100 for most business owners, they will transfer because of the way they hand their money over anywhere from $1 million to $5 million over their working lifetime. And so one of the things we do at Practical Wealth, we try to help quantify that to help people show the money that they're losing, because you can't unsee it once you understand how stuff works.
Yes.
Right. So let me get a few questions for you. So revenue, I'm going to make a statement. Revenue is not wealth. What does that mean to you when I say that? And why do so many business owners miss that distinction?
I totally agree with this sentence you just said. Revenue is not wealth, because it's not because your business is bringing $300,000 at the end of the year, or 400 or 500 or $1 million or $2 million. I work with a lot of clients like that are making six figure or seven figure. But at the end of the day, you have to look at what is the net profit. What is the net profit? And that is, I'll call it that step one, net profit. But
Mm-hmm.
step two, what do you do with that net profit?
Mm-hmm.
you know what is it? Are you budgeting for investment? Are you savings? Are you, and I know you are a big guy in terms of saving, making sure that you plan the buckets right, for your clients and for people, making sure that the money, the net profit that you have, it's just not something that you take and do personal expenses and then the money is gone.
Right.
So that is a good thing on one side. But on the second side also, on the net profit side, you get taxed. You get taxed. If you take somebody that is like paying, that is at a 30% effective tax rate,
Mm-hmm.
your net profit is like $300,000. So you're losing about maybe your $90,000, $100,000.
That's a lot of money.
And what I find, and I work for a lot of business owners, like I find studies have shown almost 90% of business owners are overpaying the IRS.
Yes.
90%. It's crazy. And when you talk to those business owners, they feel like, oh, I'm working with an accountant. I'm like, how many times do you talk to an accountant a year? Oh, just at tax season. That's the wrong way of doing.
That's
Because
right.
when I hear that's the wrong way of doing. When I hear
Right.
this, it's like, oh, just I mean, there's no. If you go to a tax accountant just at tax season to file your tax return, there's nothing you can do. It's just recording history.
Right. You got
We
a
can't change.
historian. That's
Yeah,
right. You got a historian.
we can't do anything.
Right.
It's like, and I always take this analogy, and I'm like, look, it's like you sitting in a car, in looking at the review mirror. The review mirror is just looking at whatever happens in the back. We can't change anything.
Right.
It's gone. It's gone. We're in 2026 right now. Whatever happened in 2025 in terms of taxes, there's nothing we can do.
That's
It's gone.
over. Yeah.
It's over.
7/31st. That's over. Right.
It's over. What you need to do, you need to be sitting in the car and looking at through the windshield. What is coming up? What can I do so whatever is coming up can change and benefit me legally, of course.
Right.
What can I do? So then is when you start bringing strategies, and then there is a lot of strategies that I talk about. This you don't have to be wealthy to talk about tax strategy. There's strategies that are called the low hanging fruit.
Mm-hmm.
So again, answer to this question is Revenue is not wealth. Revenue is not wealth. It's whatever stays after the net profit, and how do you categorize that net profit? Through tax avoidance, through investment, through savings. That is where you start actually compounding your wealth.
And because that is funny, because the I think the business is the I run this program here in Philly called the Profit Lab, and I view one's business as your primary investment, your asset, investing in saving money in taxes, investing in marketing, investing in efficiency to make it more profitable. That's better than hoping some mutual fund goes up. And I'm not saying you need to do that, but you have control over that business if you get a good because that's why we're talking. So because business is a team sport, right?
That's right.
And you've got to work together. It's funny that you said that statement you said, because we have I do for our business and families and business a cash flow map, right? And so we call it tell your money where to go instead of asking where it went, right? And so one of the statements I'll say in the webinar I do is, I say, listen, budgeting, and I would say the P&L is like driving a car forward, looking through the rearview mirror, right? And you've got to look through the windshield, because when you get your P&L, that's history. That's last month,
Yep,
right?
that's
And
correct.
you got to assign. One of the things that we do, this is where we align greatly, is even though you do the books, I need the P&L so I can do the forecasting. I'm sure you do forecasting also, because
Absolutely.
each dollar needs to have a job when it hits your what I call your business or your personal economy. And we just kind of let lazy money lie around. So let me ask you a question. So when a business owner comes to you making good money, but still feel broke, they're still feeling broke, where do you usually look first when you're looking at their situation?
So if a business owner comes to me and then they feel like, oh, I'm making a lot of money, but I'm not making it. The first thing I always go is like, do you have bookkeeping?
Yeah,
That is the first thing. I need to see the books. I need to see, because if you don't know the numbers, you can't track anything.
that's right.
Because I believe that trackable, then
Yeah,
it can be fixed.
yeah,
Because if we can track it, we know the numbers. We know you're bringing this amount of revenue. This is what is going out as expense. Now we look at the expense and see how do you categorize those expenses. What can be saved here? Also, and then we go to taxes. On the tax side, what strategies are you putting in there? These strategies that you don't even need money to do those strategies, like I call the low hanging fruits.
mm-hmm.
We start quickly to do those low hanging fruit, but entity structuring. What kind of entity do you have? We need to check. Is this entity is bringing enough protection for you? Are you good? Then we go to the whole low hanging fruits. Low hanging fruits like hiring your kids in your company, or Augusto, or business travel expenses, or accountable plan. Those are low hanging fruit that are called. It's really simple strategies that are actually in the internal revenue code that
Right.
gives you the potential to use them so you can save on your tax bill. So I always start with the P&L. After the P&L, entity structuring, tax planning. Tax planning side, we start with low hanging fruit. Then we go to the advanced tax strategies. The advanced tax strategy is really where we start going to the four elements that you talk about. How can we invest in housing so then you can get a tax break? What can
Mm-hmm.
we do in terms of energy? Maybe it's sort of tax equity. What There's so many strategies. Then we start getting there to help you. And it's the same thing also on if for a W-2 earner that is making 250 or $300,000.
Mm-hmm.
You're not stuck. No, you're not stuck in terms
That
of
see,
tax rate.
that's I'm so glad you said that. They don't know. They think they just gotta take it.
No, you're not stuck. There is ways. We just talk about those four elements. If we take some of your income and we redirect it to some type of investment, then you can get a tax break. We've
Mhm.
done those things business with W-2 earners or high income earners, and then they're saving like 30, 40, 50% on the taxes. Can
Mm,
you imagine if you were handing a check of like $100,000 to Uncle Sam? We help you save 50,000 of that. What can he do for you? You can save for your kids' college education. You
right.
can invest into the next business that you want to start. You can start having now more money in your savings account. You can do some type of investment, even if you're putting in your life insurance policy or things of that nature. This is where you start building wealth, because now you're being strategic about your income. Now you're taking steps that are making sense, that are saving you money.
I love it. What are the most common leaks, silent leaks, right? that you see in small business and in high income households looking at their stuff?
So the common leak that I see, I'm gonna go to tax preparation versus tax planning.
Hmm.
That's the common leak. If you are a high income earner and then you're still doing tax prep only, there's the leak. There's it's like you have a,
So let me just flesh it out. Tax prep meaning I got my W-4. Let me give it to my tax preparer. That's
I got my W-2, and then in January, February, I got my W-2. I call my accountant.
I got
He's
my
been filing
1099s from
my 1099. Yeah, he's
my
been filing
investment
my
companies, all that stuff.
Yep, he's been filing my taxes for a long time. Just give him a call and send him, and then he just put the numbers, and I see wherever I stand right now. And then you'll find some people that they have a W-2. During maybe they're making like 300K or 250, just for the purpose of this, and
Hmm.
then maybe they paid about $70,000 or $80,000 in the W-2 withholding. So the tax prep just file the tax return and say, hey, this year you don't owe. Maybe you're getting like a refund of like $1,000 or 2,000. I'm like, oh great. Oh, I didn't pay no taxes this year. That's not true.
That's right. Come
That's
on
not
now.
true. What about the taxes that were actually withheld? Well, let's say 70,000 or $80,000 that you just lost. Do you know that there are strategies that you can get this money back to your pocket legally? Again, because we're not using fake strategies now. We're just using legal strategies that are actually helping you to save a portion of that money. Those are strategies. So for me, it's always that's one of the leak that I see.
Right.
Tax,
That's one of the first thing I see is that they're over withholding. So
yeah,
they got a job. I already know they're over withholding. I think most times they're putting relative to their savings too much money in their 401k because
yes,
they don't have any access to. So if they don't have any access to money because they're putting all of it in a silo they can't touch, then they use debt to sort of support lifestyle. So now you've got this debt. And so when we say debt, we mean um, you're using future earnings as
yep,
collateral. That's debt, right? And like a mortgage is not, it's debt, but it's really a liability against an asset. But credit
mhm,
cards, car loans, when you get a credit card, they're using your future earnings as collateral, evaluating, okay, they make money, we're putting a lien or going to your future earnings, and then that is a transfer. And 35, we say we do infinite banking, 30, Nelson Nash said 35 cents every dollar is leaving your household in the form of debt to others. That's why we say, look, you can be a customer of the bank or you can learn to be the bank,
bank, yeah,
which is what our firm is about.
like
So
anything, right?
yeah, infinite banking. And let me see. What's the difference? Now you said this. Okay, so let me flesh that out a little bit more. Okay, so now we know what tax prep is. In your opinion, because they don't know, like they think I got a XYZ or a CPA, and they take for granted that they're getting tax planning, but that's not the case, is it? What?
That's not the case because tax planning is really actually just looking at your income as a whole. Okay,
Mm-hmm.
how much money are you bringing in? Is it what? How is the income coming? Is it coming through ordinary income? Is it coming through passive income? Is it coming through capital gain? We'll look at this the way your income is coming, and then we will also look at okay, what is possible ways that your income might grow or might change during the year.
Mm-hmm. Mm-hmm.
Then we look at it. Okay, what kind of entity do we need to do so we can start saving money? Maybe we move from an LLC to an S corp, so you can save 15.3% on self-employment taxes.
Mm-hmm.
It's just basic entity structure. Or maybe we'll move you to a C corp. It can be double taxation, but trust me, there can be tax saving there, even though we move you from, LLC or S corp, which those are pass-through entities, to C corporation, where you're
Mm-hmm.
gonna pay the 21%. But there's ways, also there's reason why we do that. So then when we do that, we also start now. What are the legal? What are the low-hanging fruit we start doing? We start doing low-hanging fruit strategies, accountable plan, making sure that portion of your office, some of the expenses at your house are actually shifted to the business legally. Then we go to Augusta rule. You can rent your house to your business for 14
Mm-hmm.
days out of the year, and that
Mm-hmm.
income is tax-free money to you. Then we go to you know hiring kids. You can hire your kids within your company to do legal work. Actually, they can help you through content creation, maybe social media management, maybe some type of cleaning, or maybe some type of job, or maybe some type of advice or customer acquisition. you can pay them up to $16,000, which is the standard deduction, and then
Mm-hmm.
they don't pay taxes on it. We do those things. Then maybe we set up a family management company for you. Then we can bring your spouse, kids and things of that nature, people that are within your family as director, board director in your company. So then you can actually save on some of the expenses that you guys do, and actually they're supporting the business. It's all about if they bring meaningful contribution, information, or any type of thing in the business, then those expenses can be right enough in the business side. So then when we do those things, then we move to the advanced strategies.
Right.
Advanced strategies is like our strategies sometimes people never heard about, solar tax equity, box house, cost segregation, DNA harmony. There's a lot of strategies is there. I can keep on going the list with like 50 or 60 strategies that are powerful strategies, even retirement planning. And this is where actually we try to work with people like you guys, Curtis, where actually understand the retirement and the insurance side of it. There's a lot of tax saving in there.
Right.
So we work with those things and making sure it's all about planning everything correctly, because you when I work with people, I tell them you have to understand that your financial life is not a collection of separate problems. It's one
Right.
ecosystem,
Right.
and it
That's right.
needs to be managed as one. So when you start doing those things, then we start pulling the people that are the right people that are doing the right things. So then everything start communicating. So then you can build wealth.
Yeah, we call it the most will have what I call a financial junk drawer.
Yes.
They got, I got this account over here, I got this insurance over here, but they're not coordinated, and they don't have their strategists or their advisors coordinated, all singing the same tune,
Yep.
all looking at the same worksheet,
Mhm.
and that's why, I mean, tell him how you found me, because it was just funny because I put a video out on the Money for Life operating system where I kind of was talking about that kind of stuff, and I was
Yeah.
like, who is this guy just emailed me? What?
I
Tell me.
know it's Curtis. I mean, I have been following your episodes on YouTube, and I'm like, you're bringing so much value. And then with this drawing that you did, especially that talk about the different buckets, on different buckets of how income is actually flowing. It's like
Yeah.
this is amazing. Like this is mind blowing for me. It's like you're so passionate about bringing value to people. I'm so passionate about just doing the right thing. And then I was like, and when I talked to him, like, no, this guy's passionate. This is not about just you actually, bringing a service to people. No, you are actually building them. You are building their wealth. You're building their life because you're taking your time to actually put everything together. I'm like, yeah, I need to talk to you. I need to talk to this guy because it's so much that I need to learn from you actually. And at the same time, just a little bit of experience that I have in taxes. I've been in tax, tax strategy, tax prep, tax strategy, tax planning for the past 11 years.
7 years.
So
Hmm.
yeah, I'm like, yeah, I need to also bring a little bit of my expertise, but also learn of all those great people that are actually on your show.
Yeah, I mean, I'm passionate. Well, I'm passionate about that, and we just were sharing. I was like, all right, and it's like you got to build. I want to build the team so I can serve our clients better, and taxes is like the number one wealth transfer, right? So I'm on my for me not to. Only thing I know because I'm a nerd and I need to know because I had pain, right? People was asking me before we started about all those books in my bag. I have like half a shelf here on taxes, right?
Yes.
Maybe a quarter of a book, but I got at least like 8 books on,
Mhm.
Tom Wheelwright and what's his name, Sandy Bakken,
Right.
and all of my favorites. So
And one of the books that you always reference, Richard Porter, you reference it a lot of times, and I really appreciate the why, and the four quadrant and the things that you talk about. It's a powerful thing.
because like if you I teach my kids that. So listen, if you understand the cash flow quadrant, it's
Mhm.
more than just like if I look at a politician, I can, or like I'll say a politician, I can look at where do they lie on the quadrant. I already know their philosophy, and how they think, right? So as a business person, okay, you can kind of read the tea leaves because philosophically where they stand. So you either got to lean in to profit from that or protect yourself, right?
Mhm.
From that. So that's where, again, it's a team sport because you can't know everything. I know enough to be dangerous. I've got some principles that I do, and then I know to get out the way and introduce them to you, Rashid. So that's what we're going to do. And that's that. Listen, I'm so fired up. You don't even know. Should a business owner be doing every quarter so tax season is not a financial ambush?
Yeah, so every quarter is really actually the same basic principle that I work with my client. It's like we meet with you, usually depending on at what level the client is, what kind of hand holding they need,
Mm-hmm.
maybe once a month or once every 2 months or once a quarter.
Mm-hmm.
And quarterly, we know you have to pay quarterly tax, you have to, do those things. So, but at some time, depending on the strategy we work in, we can even tell you that there is no quarterly tax to pay because your tax bill is going to be zero, maybe. Yeah, these possibilities, or maybe your quarterly tax is going to be less that you don't have to do those quarterly payment. So it's all depend. When we start working with the clients, we look at the journey. So say there is no surprise. You know where you stand. You know what's coming up because we built everything since the beginning, and then we do what is called quarterly adjustment. So
Mm-hmm.
once the quarter gets there, we're like, hey, is there more money that came in that we were supposed to get? Because if you're in business, business goes up, goes down. If you are a W-2 earner, that's a little bit different. Even on the W-2 earner side, maybe you got a bonus, or maybe you got a raise, or something happened, or maybe you have stocks, and then the stock went up, and then maybe you cashed in it, or maybe you have a property that you wanted to sell, so you have capital gain coming up. So we need to
Mm-hmm.
mitigate all of that and try to understand what is going on in your financial life. So then every quarter, depending on what kind of handholding you need, we make adjustment. We make sure that we're doing the paper, we are bringing the strategies, and sometimes we bring new strategies to the strategy we built for you
Mm-hmm.
at the beginning of the year because your
Mm-hmm.
income shift. Maybe
Because
there's
you know them and you've been working with them and you know their business. I
Yeah,
think
and
that.
I tell my
Mhm.
clients like, hey, when you start working with my firm, I have about 20 employees in my firm. I'm an enrolled agent. Some
Mhm.
guys don't know exactly what is an enrolled agent. That's the highest credential the IRS can give to anybody in America. I'm a certified tax coach and I'm a certified tax resolution specialist.
Mm-hmm.
Yeah, so those are my credential plus my MBA that I did. So when you start working with us, this is a relationship.
Mm-hmm.
We build a relationship with you because this you are not gonna be talking to us once a year where tax season gets around, you have your 1099 or you have your W-2. No, we have to be working with you during the year, making sure that we're doing maybe monthly meeting, or maybe we are doing it bi-monthly, or maybe we are doing it quarterly. So we're making sure that your taxes, there's no surprise, you know where you're going, and then we are making sure we're going to save you taxes legally.
That is so, like, I think that if you can help them do that, that kind of takes a weight lifted off you once you know you got that covered. That know that you've been, like when we do our cash flow mapping, we try to help them take a percentage of their revenue and put it in account for, what I call reinvestment or profit. Pay yourself into like little buckets. When dollars comes in, there's this, and this. I just chop it up, and but doing that, it and working with you to watch your numbers every month. I think that's so critical. Like really, you should work to you monthly or quarterly. You should be looking at your numbers every as a business owner every week, even as a household.
Yeah,
You should
absolutely.
look at your numbers every week. You can't like if you also do it with households. If you're running a business and you didn't look at what's coming in and what's going out, how long are you going to be a business? Not very,
All right.
right? And that's what I find even on the personal side. Let me ask you. So let's that where with our cash flow map is completely aligned. What and you named some of these? We talked about low hanging fruit. I just want to make sure I didn't leave this. What are some legal strategies that business or owners overlook because nobody's proactively advising them?
Yeah. So, and then like I was saying, I started with the low hanging fruit.
Yeah.
Low hanging fruit strategies. You might hear on the internet, oh, you can hire your kids. Yeah, absolutely. You can hire your kid, but they have to be doing legitimate work.
Mm-hmm.
This is the foundation. They have to be doing legitimate work. And now it's going to depend on what kind of entities that you have. If you have an S corp and then you hire your kids through your S corp, you're not saving taxes. You're paying taxes. The S corp cannot hire the kids and actually for you to get the tax benefit. So when you start, so if we have to frame it, we have to create a separate LLC, which is a family management company that will contract with your S corp. Then the family management company will be the one hiring the kids. Then you can save money on taxes. So
See,
then,
nobody's ever explained that. Okay, come on now. Go ahead.
yeah. So now, so it's like if you come to us and it's like, okay, maybe you have an entity, is making $500,000, but you are on
Mhm.
LLC, or maybe 400, you're on LLC, right? Okay, we need to move you to an S corp so you can save 15.3% on self-employment
Self-employed.
taxes.
Yep. Hmm.
But by doing that, if we have to do the hiring your kids, it can be done on the S corp. So we need to create a second entity, move the first entity to an S corp, create a second entity which is going to be called the family management company, and that family management company will be contracting with your S corp to do legitimate work for your kid, to be to be the middleman actually within between your S corp and your kids. So
Hmm.
then that family management company will be an LLC that will hire your kids, and then if you don't want to pay taxes, you pay them up to $16,000 per year.
Hmm.
Then on that, you save money on taxes. Now people might feel like $16,000. Okay, let's take it. If you were on a 30% effective tax rate, $16,000, you just save $5,000 by hiring one kid. What about if you have two kids? That's $10,000. Imagine what is $10,000 for a business owner. You can invest into marketing.
Right.
You can invest. Even take that $10,000, put it in your life insurance policy. That will grow at a rate of maybe 6, 8, or 10%. Maybe put it in a CD account. This is how you build wealth.
Right.
So that's the first. Second strategy, Augusta rule. The Augusta rule is the rule that says that, this is backed by IRS code section 280
Hmm.
by the Internal Revenue Code. They say a business owner can rent his own house to his business, and then the income that comes to that is tax-free money. So then the income will need to come from the S corporation. So the S corp will pay you by renting your house to conduct business meetings, to conduct business board meetings, to conduct those type of strategic planning for the business, how the business will grow, marketing strategy, things of that nature, for 40 up to 14 days out of the year. That
Hmm.
income is tax-free money. So let's go. If the business is actually renting your house at a rate of $1,000 or $1,500 or $2,000 a day, let's say $14,000 per year, you just save maybe another $5,000 in taxes if you're at 30%. If it's 28,000, you just save $10,000.
Hmm.
Low hanging fruit. We just with two kids, Augusta, we just saved you $20,000 in taxes.
Oh no.
You're really
And you just got to learn the rules. And so, all right. So let me hit some of my pet peeves because what I'll hear stuff. I'll hear.
Yeah, but Curtis, before you go
Go
into
ahead. Go
that, let
ahead.
me
Go
tell
ahead.
you.
Yeah.
But for those two strategies, there needs to be a lease agreement between your business and you.
Yep. Yep.
It needs
Yep.
to be a lease agreement. There needs to be traceability of the business paying you. It just not have the I did it. No, it needs to be paperwork. So
You gotta have minutes.
you have to have minutes of the
Yep.
meetings. You have to have
Yep.
those things. So we work with the client, making sure they do all those things correctly. Same thing
Right.
if you're hiring your kids, they need to be a time sheet for the kid.
Right.
You need to open a custodian account for the kid. So those are things that you gotta pay attention that you see on social media, but implementation
So,
side.
so talk about cars. That's one of my pet peeves. Like I hear this stuff. Yeah, I just bought $100,000 G wagon, right? And I wrote off my taxes. No, you did, but it's more to it than that. Like this is the stuff that I say. Look, you can't get your financial advice from TikTok. Now, let me just put a little disclaimer in there.
Yes.
We're not giving tax advice. We're not your financial advisor. We're not your tax advisor yet. So this is for education
Yes.
purposes, just to let you know, hey, this is what's out here, but you need a competent person to talk about that. Okay, so now finish talking about my pet peeve because people get all excited about this
Yeah.
stuff, but they don't know the there's some stuff underneath this stuff and how it
Absolutely.
works.
Absolutely. As you say, this is not a legal advice. It's just for educational purposes,
Right.
sharing information. And then if you want more information, go work with your tax accountant, go work with an expert that is actually going to go dig deeper and make sure that those things apply.
Right.
Same thing on the car side. The car side is the that you can get. And on the depreciation side, IRS looks at there's two ways that they look at things. It's first thing is, do you have what is called a luxury car, or do you have what is called a a business car where you're able to write it off is car that is actually more than 6,000 pound. 6,000 pound, that can be the G-Wagon, as you're talking G-Wagon, or maybe
Mhm.
the Range Rover, or maybe the Bentley, or so maybe a truck. It has to be
Yeah, even your
6,000
Ford Explorer or your pickup
or
truck. That's all. Those are over 6,000 pounds.
over 6,000 pounds.
Yeah.
So that is like, this is where actually you can, with the accelerated depreciation and things of that nature. So then you can get to write it off. But
Mm-hmm.
also, it needs to be a car that is fully used for business. It
Mm-hmm.
has to be used for business. You have to, or maybe if it's not fully used for business, what's the percentage that is used for business? Those that need to be documented. So then you can do a depreciation schedule on it. Or you have a car which is called a luxury car. Now, luxury car doesn't mean that it has to be a Ferrari or a Lamborghini, or no. Luxury car is anything that is less than 6,000 pounds. This is what IRS categorizes as
Mm.
luxury car.
I know that. Okay.
So anything that is less than 6,000 pounds is considered a luxury car. So on then side, you allocate the percentage to what is on the business side. Okay, you are using 40%, 50%,
Mm-hmm.
60%.
Mm-hmm.
Then we allocate it and we do the depreciation schedule, making sure that you take those those write off correctly.
I love it. What it seems like a CFO. What role should a CFO type advisor, which is kind of what I'm hearing when you talk about the stuff, or at least between the two of us, right? Play in small business that is not big enough for a full-time CFO. Do they need? How would this help them? This
Yeah, on
exercise,
the
this thought
CFO
process.
side, it's like, the CFO is really your advanced bookkeeper, pretty much.
Mm-hmm.
Your bookkeeper is looking at record history. You spend this amount of money on rent and payroll, on marketing or R&D, things of that nature, just recording. CFO is now coming up and looking at details of, okay, where do we increase our market value? How do we make more money? How do we maybe get an extra 20 or 30% on our revenue for the next 3 to 4 months? Is this employee that we are paying? Are we paying them correctly? Are we actually spending more money in terms of labor than we
Mm-hmm.
should? So then
Mm-hmm.
the CFO comes in and actually look at those details, or even on the tax side. So
Mm-hmm.
it's pretty much what we do, because when we come, it's really a CFO tax strategist, because
Mm-hmm.
we are looking
Mm-hmm.
at it. Okay, no, wait, your entity structure is not right. Let's change the structure of your entity. Let's move it to this side. In terms of taxes, let's do this strategy. Then you can have more money. So when I work with clients, I tell them it's we help you get a raise without working harder.
There you go.
We help you get a raise without working harder. And I can say, if you're making $500,000 a year, and a $500,000, and we helped you save $50,000 in your taxes, you just got a 10% raise without working harder, but just work smarter. So that's what we achieve. So
That's
this
right.
is exactly the same thing on the CFO planning side. It's we just making sure we do things correctly. We adjust some stuff. Now you feel more cash flow. Now you can invest into life insurance. Now you can do the buckets correctly, as Curtis said. Put some money here, then you're making things work.
That's right. Right.
Yeah,
'Cause you got to keep more. I want you to keep more of what you make and earn more of what you keep. Okay.
exactly.
And let me ask you. So, is there a danger, or what's the danger in chasing deductions just to reduce taxes?
Oh, the danger there is just, if it's just opening yourself to an audit, or doing things not correctly.
Mm-hmm.
Because if you just pushing for deductions, but not doing the proper paperwork, record keeping, doing things correctly, and you just want to just get deductions, no. Pay
Mm-hmm.
your fair share of taxes if there is nothing else to do. And I tell my client is that we are not here to tell you that you're not supposed to pay taxes. No, that's not what we're doing. No, we are here to make sure that you are not paying no more than one penny that what you're supposed to pay, by
Right.
using legal strategies.
Right.
That's our job. Our job is bringing those legal strategies to you, so you can use them fully, everything, until you expired all of those possible ways. Then you don't pay no more than a penny that you're supposed to pay. But if we use those strategies and then there is nothing else that needs to be done, you need to pay your share fare of taxes. This
Mm.
is how the government also makes money, so they can keep growing the economy.
That's debatable. No, just kidding. All right. So
Okay,
we
well,
we Next question. Right? No, just kidding.
Okay, yeah.
But so I'm, see, my listeners know I'm Lord slightly libertarian, but
Okay.
the
No, I
but
understand that. And
yeah.
I do respect that.
So
Yeah.
what is the what I have a colleague on that says, you look, you're supposed to pay what you're supposed to pay, but you ain't got to leave a tip, right? So let's not leave Uncle Sam a tip.
Mhm.
What? Let me ask you. So let's. Well, I want to because so much good stuff you said there. Is there one financial system? No. What is the one financial system every business should know? Business owners should have in place before trying to scale. I think you've really kind of said it. I just want to,
Mhm. Yeah.
good
So,
books, good,
the,
all that kind of stuff.
yeah, you need to be able to track everything, know your
Mm-hmm.
numbers.
Mm-hmm.
That's the system that I want to tell any business. You need to know your numbers. You need to know your numbers before you scale. You need to track everything. You need to be able to have all those numbers. Like, if ask you, how much are you spending in marketing? How much are you spending on payroll? How much money is coming in? Where is this money going out of your business? Because until you track everything, until you know your numbers, you won't be able to scale. Now, if you know your numbers, then you know, do I have the right structure? Do you have the right entity structuring? Do I have the right bookkeeping? Is am I my accounts are well categorized? Am I optimized? So those things you need to do. Do I have the right tax strategy? Am I taking advantage of all those low hanging fruit? Okay, what other advanced strategy do I need to use? Then CFO planning. Okay, now I'm looking at historic record on my bookkeeping staff. What do
Right.
I need to plan for future? Okay, retirement planning. What do I need to do? What kind of life policy that I need to open up? How do I build my legacy?
Right.
Because you get into business to solve a problem, but also to build your legacy. So
Right.
all those things that you need to start planning those things. You just don't just run your business. And I see business, you know, owners all the time. I see people that are making millions, and sometimes they can't tell you some numbers.
Which is incredible. I mean, I was doing a class last month, and I said, "Listen, the purpose of business is to make the owner rich. Don't get it twisted. Like, don't listen to all these.
Agree 100%.
You know
Yes.
what I mean? Like that for whatever that means to you, but it's for you to become financially free. Now, building jobs, that's a byproduct of that, but that is the engine. But that is why people will tie themselves to rafts to come here. They ain't come here for a job. And I think that a lot of people have lost sight of what makes the country great, the ability to own private property, to, so now if you own private property and you can put a building at property, now you can turn that equity into capital, right? To borrow against it, right? And what just so you got to know the rules to own a business, then to have the tax code help. Why is Elon rich? Because he's got all these, what he's doing. He's energy, he's the batteries, so he's got all these subsidies, and then he's using other people's money, which is why he doesn't pay taxes because he don't have any income. So that's where you get into advanced stuff. But y'all have to, because how important is it for y'all as you talk to them? One thing that drives me crazy is accountant handles that. Like, to me, you need to know what these numbers mean. Like financial literacy. Kiyosaki talks about financial literacy. Financial literacy is not investing; it's accounting.
Yes.
The numbers tell a story, right?
Mhm.
So you need to know the story your numbers are telling you. I used to do, I don't think I told you this. I used to do, oh my God, I'm old. 25 years ago, I was working with this company that trained New Clients Inc. They train accountants on how to develop a bookkeeping business. So
Uh-huh.
I would go out and I would meet with these people, and I didn't really understand the numbers and all of the 5 financial statements. And I realized most business owners would get the little packets, but they never looked at it. It's kept working, and they don't know the numbers. How important it is for you to, when you get your P&Ls, to how would they know, right? To begin to understand the story. I'll give you a perfect example. I was in the bar business, and my dad got sick, so I took over. And then I was interviewing accountants, and this guy worked in the bar business. And he just looked at my gross sales.
Mhm.
He looked at my cost of goods sold, like what I was paying for liquor and beer. And he was like, man, they're killing you. And I was like, what are you talking about? And it drove me crazy. I didn't understand that. Right. So, Curtis nerdy mind, I went to work on that.
Yeah.
Inventory control. I was, I went to town.
You wanted to make it right because
Yeah.
they can't tell you this is driving you crazy, and then you're not gonna act on it.
Right. So I'm looking at it, I got people stealing, overpouring, and a shrinkage in retail is like probably their biggest expense, people stealing their stuff. So if you don't do inventory control, if you don't watch your stuff, that's really critical. And it's important to go over your numbers. Like, how is that a thing? Like, it's just what I see, or you see the same thing out there?
Oh yeah, I totally agree with you. It's you gotta know your numbers at a business. You gotta know your numbers. You gotta, and you're gonna be able. A business owner is that. So these two things that I say. A business owner is that. That's my belief. Any it can be debatable. A business owner, there's two things that you need to understand. You cannot tell me you cannot do a sale. A business owner, you need to be able, even though you are not on the selling department in your business, you need to be able to, tell me what is the value that you bring into a client.
Right.
What is the value? What makes it that I want to work with you because you can solve my problem?
Right.
You have to be able to bring value. And this is what I believe that's number one. Number
Because
two,
revenue is a result of bringing value to the market.
bringing value, exactly.
Yeah.
So what is the value? And then you need to be able to make sale that a message. Oh,
Right.
this is the value that I bring to you if you come work with me, and this is the value. And the second side is you need to be able to read your P&L. I don't care if you don't know accounting. You need to be able to at least read your P&L and understand it, because if you're not doing that, it's like you fill in a bucket with water and then there's a hole
Hole at the bottom.
and bottom, and then it's going out because
Right.
you don't understand the numbers.
Right.
And but once you start understanding the numbers, trust any it doesn't take rocket science to understand those things, but you need to understand it now. Of course, when you get businesses scaling, you need to work with an expert,
Yeah.
and so they can teach you those things, and then they can handhold you, making sure that you're doing things correctly. But you need to, those things are fundamental in business.
Tell me, if without naming any names, can you think of any a case study? What what did it cost them to fix it? What problem did they have, and they came to you with, and you were able to get them straightened out?
Yeah, sure. I have so many. As you said, I don't have to name it. I have so many names. It's I did last week. I just did a keynote address. Not even last week, just a couple of days ago. Keynote address, and I was talking about importance of tax planning and tax. So I had a business owner that came to me, and he was making about $2 million a year. Well, it was very successful actually. So, but when I took a deeper look on his taxes, I actually found $190,000 of saving. $190,000 saving, right? Changing the entity structure, some of the entity structure, because he has so many entities. So many, and then also bringing advanced tax strategy. Bringing advanced tax strategy. It's like, they talk to you about cost segregation, talk to you about DNA harmony, talk to you about solar tax equity, talk to you about box house. I know it's those are a little bit, advanced. I don't want to maybe go through details here because it's going to take us
We're gonna
maybe
bring you
another
back.
hour. Yeah, it's going to be another hour for me to unpack things.
Right.
Okay, what is DNA harmony, or what is maybe box house? But those are powerful strategies that we bring to our clients. I know one of the most known strategies is cost segregation study. Trust me, that is much more powerful strategies than cost seg study. So when we bring to our real estate, investors or real estate professionals, that there's more stuff that you can do that will save you money than cost seg study. And they're like, really? Yes, we can do that. But at the same time, also, you want to bring back to some of the clients that a client that is like $150,000 a year. Just it's not a lot of money, because I don't want to just talk about the 6 7 figure. Someone is making $150,000 as a 1099 or $200,000. 200,000 1099.
Real estate agent.
Real estate agent. You're making
Mhm.
$200,000 at 1099. You have an LLC, and at the end of the year, you're taking that money as profit, because, and you just did your normal expenses, and then you end up paying maybe like $50,000 in taxes. Real case scenario. If we change the entity structure, we're being a low hanging fruit. Sometimes we don't even have to go to the advanced tax strategies. Low hanging fruit, we restructure some of the stuff, we time the income, we make sure that you do things correctly, invest. You start planning about your retirement, start planning about those things. Again, we just have to pull those strings together. That $50,000 can be zero legally. Imagine. Go ahead.
No, I would. So if somebody had that, let's say they had that already, like, so in 2000 closed, and let's say we're midway through the current year, 2026. Are there things? This would be a talk for another day. I'm just curious. Are there things among some of those advanced strategies that could be done for this year, but could go backwards to maybe knock out some of the liability in past years?
Yes, that's you asked that question. That's really good because the strategies that we bring that we can go back and save you some money. These strategies. It's like one strategy. It's the tax strategy, which is a
Mm-hmm.
government incentive. Like if you invest into solar companies that are actually building all those renewable energy things and all those solar panels and things of that nature, we can go back 2, sometimes 3 years, get a refund from government,
Mm-hmm.
that will actually go to those solar tax companies, and then they give you some tax break, which you're gonna get in terms of depreciation. So then we can save you money on taxes that you already paid because whatever you paid, you that money is gone. But we
Right.
are able to bring that back. That's one strategy. There was another strategy that we were also using, which is called the convertible tax bond. Using that strategy, we're able to bring you back 30% of your saving, 30% saving on your taxes that you paid last year or last 2 years. Let's say if you pay 100K, we're able to bring you back $30,000 refund to your pocket legally. Can you imagine that? What about if it's 2 years, you're getting $60,000 back? That's a lot of
Come on
money.
now.
Yeah,
We
that's
know
a lot.
that's where to put it, right?
Yeah,
So
so
that
so there are some
that
externalities.
because it's so, because we're running people, and I'm
Mhm.
sure you have too. Where all right, Curtis, I have done my taxes in the last 3 years, 6 years, right?
Mhm.
So they're terrified and waiting for the other shoe to drop, right? And so you can't really go full out with that. It's always this low level of underlying stress.
Yes.
Now, why can I say that? Because I've done that, right? So I'm not making this up. So
So,
i'm I'm really in business, right? And so it's so powerful to have somebody like Rachid on your team, right? In your
mm,
corner. What does it look like to work with you? Like, let's say they hear some good stuff here, and what's the I want you to tell them how to reach out,
reach
how
out.
we're going to work together, but how what's that first meeting look like? What's the first step?
Yeah. So thank you. I'm glad you brought it up. And then I just want to throw something quickly there. As you talk about someone that haven't filed a tax return for maybe the past 3, 4, 5 years or 6 years in this care, we do tax resolution also within
Mm-hmm.
my firm. So tax resolution is really you have issues with the IRS, you owe them some money. Maybe you owe them, I don't know, 20,000, 10,000, 15,000, or 100,000, $200,000. Don't be stressed. There's ways you can get a deal with the IRS legally. So we do those things. We do often compromise. We do partial pay. We do currently non-collectible CNC status.
Mm-hmm.
Those things that there's possibilities. So it's always a way
Because
as
that's
long
the EA part. You
that's
have
the
the
easy.
license to represent them in
Yes,
front of the IRS. That's what
that's correct.
an
Yeah.
enrolled agent is.
Yes, yeah, that's
Mm-hmm.
correct. So I do representation at the IRS. I deal with revenue officers. I deal with, strike a deal with the IRS, and you owe them this amount of money. Then we propose them this, and then we strike a deal legally. I mean, you can hold them $100,000, and then we propose them $10,000. It's possibilities.
Mm.
Now, it's possible. It's all about your financials and what is legal and what is correct. We're not trying to hide anything. You just have to be for hey, he can only afford this.
And you got to work with somebody like Rachid, because like you could do that, but if you don't have a system, you'll fall right back into that again.
That's it. I'm glad you said that because when we start working with people that actually have those issues,
Because once the release
like,
is over, like,
yeah.
you
So
know,
it's like no. When we start working, you have a tax resolution problem, you have
yeah,
an IRS problem. We start solving that, but at the same time, now let's plan so you don't fall back
right,
there.
right. Because you got a behavior and a system problem, which
Yep.
caused the other problem.
Trust me. And then yeah, I'm glad you said it because some of the client that I have actually, it's on the tax planning side. They came to tax resolution. They had a problem. We helped them solve it. Like, hey, we don't want you to go back there. Let's do things
Right.
correctly. So then we change the way we do things, and then we explain it to them. We do those things. That's understand. So now I know you asked me how if anybody that wants what is the journey. The
Yeah.
journey is simple. If you want to work with us, you want to. We call it. There's the first meeting we do, which is called the assessment meeting. We'll book a meeting with you. Just sit down, just learn about your story, how much you make, who have you been working with, what did you do about your taxes, those things. We just learn about you. Then we collect some documents from you. So always start with those 2 3 years tax return that you have, those 1040s or those
Mhm.
W2 if you didn't file, or those 1099, or those things. We collect all those information about your family, marriage, no kids, and all those information. So once we collect it, then we build what is called an assessment.
Mhm.
So based on the assessment where we actually build your assessment, like, hey, this is the way you used to do things. This is the way we need to do things, and then you will see the difference. If you keep doing this is what you're gonna be paying. So then from there, then we map out the journey. We start working together. That's on the tax planning side. If it's tax resolution, it's about the same thing. We do, we fill out documentation, we fill out power of attorney, we pull your transcript from the IRS, we collect documentation from you, IRS notices and things of that nature. We do a financial analysis. This is what you owe them based on what we collected. This is what that can be achieved with the IRS. Let's work on making that happen. So those are the two ways of, plus we do also those things of bookkeepings and things of that nature. But our
Mhm.
really is really on the tax side, tax resolution, tax planning, and planning is really what we lead with. So anybody that wants to contact us or get in contact, you just I might have to drop my a link here for they can scan, book a
Mhm.
meeting with us. They can give us a call, schedule a meeting. This is how the journey starts, and from there, and trust me, it's always bringing value to the client. And I
Right.
tell them, if you come to us, you feel like you're not getting no value, don't work with us.
Right.
Trust me, we are bringing value to you.
Right. I love it. So what we're going to do is, well, tell them how can they follow you. I'm going to send me the World Show drops. We'll have the in the show notes. We'll have the links to how to reach out and just tell them Curtis sent you, so you
Yes,
know that the show is doing some good work out there. People finding them.
absolutely.
And but you are anything out there, LinkedIn, where would you
Yes.
want them to follow what you're doing? Tell
Yes,
them.
yes. I have my LinkedIn. LinkedIn name is Rachid Madani Joseph Berry. If you go on LinkedIn, Rachid Madani Joseph Berry, you'll find me on LinkedIn. Same thing on also, Rachid Madani Joseph Berry. You find me on Facebook. Same name also on Instagram. Same name also on TikTok. Company name is RMJ Consultant. You can
Mm-hmm.
find RMJ Consultant on Facebook. You can find it also on Instagram, where we post a lot of content also about what we do with the client and how they work. So, I mean, I will share those links with you. I don't know, maybe on YouTube also, I do have some contents that I sometimes I post on YouTube. YouTube is RMJ Consultant. Some people can find some good information is there. And then
Okay.
I do a conference once a month, a Zoom call once a month, just a webinar where I just drop information just for people, just to learn about taxes and things of that nature. So some of the strategies that I shared is actually something that you can even potentially do it yourself. You don't have to come to us. It's like if we share something that is you do your taxes correctly, you don't have to come to us. That's okay. We are there to bring value. If you feel like you need more hand holdings and then you need value, you come to us. Make sure also you do things correctly. You have all those record keeping, making sure your taxes are filed correctly. And once when we help we work with our client, we give them audit defense and guarantee because we know exactly what's going. What if
So if
you
you
do
got
get,
audited, you're going to
yeah,
defend them, but we know you know the number, so it's not a
yeah, you
big
know
deal.
the
Matter
numbers.
of fact, you're not even supposed to. He's not. Let me correct me if I'm wrong. You
Mhm.
can't even go to the audit. You just got to come to your office and meet with them. The client don't have to be there,
Exactly. Yep.
right? Because he
They
might say
don't have
something.
to be there. I can be just the one talking to the IRS, making sure that of it. And then audit is also is one thing that I want to clarify. Some people just say audit is something hard. Now audit is just IRS say that, hey, we seeing this stuff here. We just want to clarify
Right.
what just one documentation. So sometimes it's not. Oh my God, it's not.
It's not that deep.
It's not a
And
deep.
then
Yeah.
if you're doing everything right and keeping good records, that goes back to the bookkeeping part. Then you don't have to worry about it. Even if they did, it's like, all right, it's going to take 15 minutes because here's the stuff.
That's correct. Yep.
They're like, oh, all right, everything's in order here. There's nothing crazy going on here, and there's no gray. Even with the tax stuff, there's nothing gray there. It's black and white. It's all in the law. All the
Yep.
here are the codes. Here's
A
the.
lot. Yep. That's right.
So I think that when you hear this stuff, it's if you hearing this stuff and you work with somebody and this stuff is never brought out, you don't have a tax planner. You have a tax preparer. Okay, so
100%. hundred
right.
percent.
Nobody told me about that. I never heard of Augusta rule. I never heard of this and that. Okay, you have a tax preparer,
Yeah.
right? So you have or a historian, right? Here's your stuff. Did your taxes? Here's what you owe. So if you're tired of that, you might want to give them a call. I'm just saying.
Yes.
Okay. This is
Absolutely.
anything as we close. I thank you for your time today. That I forgot to ask you that you want to. I'll let you have the last word that you want to get out there to them, or any closing
Oh,
thoughts. For.
so I the time that we spent together right now, and I believe that we covered a lot of good information on my belief, and then I believe we brought value to people, some information. If you didn't know those stuff, then you have the information. If you knew them, maybe it's just some clarity that you need in some of the stuff. It's always about bringing value, so and I believe we were able to give. So for me, it's just anybody that's watching this is just ask yourself this question: is my tax strategy working? Is my accountant actually, did my accountant ever call me and say, hey, this is the way for you to save money before December 31st? If that is not happening in your life, then you need to find somebody that can help
Proactively, when's the last time your accountant called
because
you and said, I got some strategies to save you money?
exactly, if you don't have that, you need to find one.
Right. Right. I love it. All right. Well, I'm gonna let that be the last word, guys. So, here's what the topic of this call was, right? You've got to revenue is not wealth, is where we started, right? And
Absolutely.
so it's what you earn is what you keep, and how hard it works for you.
Yeah, make sure all those dollars are soldiers that go out there and work for you.
That's right. What's Mr. Wonderful say? I want my dollars to come back out, and I want to come back with friends, right?
Yes.
So,
That's correct. That's correct.
right. So let your dollars come back with friends, guys. Go out there, make it a fantastic day. I think that this, guys, y'all need to listen to this more than once because there's a bunch of writer downers in here, and so now if you don't have a guy, now you got a guy. Okay, so and go out there, make it a fantastic day. Rachid, thank you, and I'm Curtis May, and for the Practical Wealth Show, we out.